Good afternoon. Welcome to Options Center. It is Wednesday, September 4th, 2024. Welcome, everybody. Now, we're forming a top in this choppiness, this price action. We're looking for answers, right? Well, I think it's, price is trying to tell us that this correction is going to be a little more shallow than anticipated. Now, I do think we have just a little bit lower to go, and I'll show you that in lower time frames. But as of this point, the market looks strong, and I do believe that we go and start hitting higher targets here, and we'll look at exactly what those targets are in just a little bit. We'll go through SPY on multiple time frames, and then on the 65-minute, we'll go around the horn, QQQ, IWM, SMH, and just kind of show you where I think that price action is telling us, what kind of information it's giving us. This is a situation where we're looking for a trend change in the macro time frame. Okay, so just be patient. I know that each and every video, it almost feels like I'm flip-flopping over and over. So we had our correction already, and I do believe that Qs still make a lower high, and I'll show you what that looks like. But I do think that SPY gets to our first target at the 127 retracement of the correction we just had. So we're doing this video intraday. It's almost 2 o'clock, almost 2 o'clock Eastern Standard Time. And if you want to get these videos, consider becoming a supporter. It's 99 cents. And we did some trade alerts. We are moving. We still have put protection, but we're moving most of our trades to the upside on longs. We did one on Lulu. We did one on AMD and a few more. So let's jump into it. We have a SPY on the monthly time frame. We're starting to pull back already. Notice we're going back into the negative. We did make it into positive range. So we have the 2000 top, 2021 top, and we're working out a top right now. We're kind of on this trend line as we speak. It doesn't mean a whole lot right now. We are in a bullish position. As of right now, this could be a bullish doji, but I still think it's going to be a hangman. Do I think that the month ends? I don't think it closes above this candle, but I do believe we get a wick. Okay, we're starting to push that direction, and I don't think it's going to be much of a wick. I think we'll get our reversal after this this month, and then a continuation after. So we have some negative divergence to play through, and on the weekly time frame, we'll be looking for more negative divergence. What does that look like? If we go to our regular theme here, we have our high right here. That's our all-time high right now. All right. If and when we make a new high, possibly testing the top of this channel here, we're holding on right now to the 8 EMA. So watch out for the 8 EMA. I do think this is going to hold. If not, then we move down to the 20. And, I would not be surprised if that ended up happening with the kind of price action that is happening now. So if we gap underneath and go to about the 540 area, that might be it. And then we can look long again. So we are looking to eke out a new high here, and we'll be putting a divergence on there on the weekly time frame. We started divergence here, and we're looking for a triple divergence. All right, so we'll expand those out in anticipation. So we're in this top area. We can clearly stay in the oversold area for a little bit. This looks like it wants to hold bullish, and I'll show you why in just a little bit. But on a negative turn, we did get a reversal candle. We're getting some follow through here. And so really with this trend line from 2000 and the 8 EMA, if this holds, big if, then I think we can directly move to our next target. And again, I'll show you what that kind of structure looks like as well. But we might get a wick through here. because I don't believe the structure to the downside is quite complete. Now looking on the next board here, and if I repeat this information almost every single day, and I try to guide through. So if you just need to get through these faster, go to settings and then play these at 1.25 or even 1.5 speed. And I want to get through this thoroughly because I'm working this out with people real time. Okay. And each and every day, if I decide that things are getting negative again, then I'll flip flop right back at it, because overall we are negative. In the long run, we're looking for a reversal. Right now, I have to think that this pathway is not happening. It looks like it potentially still could, but right now we're just holding up well in the lower time frames. We have our high here. We're fighting with this 162. If we do get above it, do I think we get far above it? No, I think we come up above it and fail. Let's go down to the daily time frame. So on the daily time frame, we had our rejection off of the backtest of the bearish rising wedge, and we're getting a move off of it. But what I'm thinking, and I'll show you this on a lower time frame, is that this is a corrective A, expanded B, C into the 50 and 20 moving average. Could we get below that? Absolutely. I do think we might have a either a doji or a gap down and rip your face off rally after that. But I do think this is the spot where we kind of reverse here. Looks good so far on this upper trend line, this trend line from 2000. And, I'm never going to say it can't happen. Potentially, we could still look to the downside for here. Now, as we get to the lower time frame, you'll notice there's we had this consolidation area. We almost met that target. And so that's why I think we could go a little bit lower, and I'll show you that again in just a minute. So on the Elliott wave, we just missed the all-time highs, rejected off of it, and holding on to some MA so far. We thought we'd get a rejection anyway, or a reaction off of this anyway, but we'll see what happens afterwards, whether we get a candle here and head to the upside. But it's just looking really strong. And if this is a doji that ends up like this, that could be a potential reversal doji as well. So at this point, I'm not really looking for this deep retracement. What I'm looking for, and we possibly might have our lows into the 5-6 area here. That could be a possibility. But what I'm looking for is right around the area where we're at. And again, I'll show you in the lower time frame a little bit better for us to start, because it's holding so strong. And if this is the end of the correction, and I would consider this a wave 4. That's what I'm getting at. And so instead of this being a 1 deep retracement to 2, 3, 4, and 5, I am now, I guess you might say, downgrading this to a more direct. We're running out of time. Time goes into about the FOMC approximately. So I'm not looking for any of those. Okay, let's clean this up. I'm looking for this to be done with wave 4 and this last move to be wave 5. I don't think wave 5, unless we have this huge blow off top, goes up to 600, that 599. I think it's more likely with the negative divergence that we create on the weekly time frame, and now once again on the daily time frame. So we had a divergence there that's playing out, and then we'll have a divergence on the longer term on this daily time frame as well, that we'll be looking out for. I think this will really start to play out really soon. So I think more realistically, our 580 target into about 920, a couple days after FOMC, would be more likely the situation. And then we can move this arrow here as a rejection off of there. At that point, we should see a nice big impulse move to the downside. We have these targets here, so you can't negate the 600 yet, but we have our correction here. We're getting the retracements back off of it and into the 127 would be our first major target. And not sure if we're going to get past that because this would be wave 5 and it shouldn't be much longer than wave 1 unless we get some sort of extension where we're increasing momentum. Let's go down to the 65. All right. Okay, checking out the 65, we have our trend line that's broke here. Trend lines break all the time. We'll probably move this trend line over to wherever the lows may be. We talked about this spot yesterday. This was the minimum I think that we go down to, and I still stand by that. What's happening now is a possible wave 4 in here that's taking a little time. Now, by the end of the day, we could end up negative here, but I would buy into that zone there. So what we're looking at here is the 200 moving average. So that's still technically bullish above there. It's kind of going sideways, but we have a good support zone from a breakout zone here, as you see as well, which we gapped over here. So I'll be looking for this to hold. And what I'm looking at is this is as a corrective move for an A, expanded B that got a new high, and an impulse down here for C. And then we were talking about this being the range from top to bottom. It's a typical measured move, just like triangles. The rectangle here in the breakdown area brought us right down to resist or support and the 200 moving average. So that's what kind of brings us there. And then I do believe we get wave 5 up into our targets here. I don't think it's much higher than 572. I would have to see where that actually goes to. So let's look at it from here. Okay, yeah, so that's correct. Let's move our target. Our target would be that 127, which brings us into about the 580 going into FOMC. So really, I know that we had this target up here a long time ago. We thought that the process of this would be getting, down here and then targeting back up there. So our target remains the same, 580 going into FOMC. And this is a time range of price action getting there. So this may end up being an ending diagonal. This may be an impulse. It doesn't really matter. We have about 2 weeks to get there. 2 weeks from today is FOMC. And so we should have a lot of catch-up trades that are really coming into play here. And so we'll be playing a lot of these. And I did make a video on it. I'll post at the end, looking at PayPal, Lulu, GME should pop. There's a lot of things that should play some catch-up. But I do believe we're in a wave 4. And we just eke out a new low here at about 547. Here's the other way to look at it. And from this point, why so shallow? Well, I do believe that this is a possible. I renumbered this one 1, 2, 3, and I put the 4 here, but this would be the end of 4 and into 5. That 5 should go into about the 920 area, and this should come into play down here. Okay, so some of these time clusters here. All right. And so this is not valid for us until there at this point. Now, where do we get the wave 4? So you could put the end of wave 2 here or here. We'd try this structure here, and then we do this to the high up here. Okay, now cleaning this up, all we're looking for is the 236, which you already hit. And then we'll be looking for the 382 being a typical wave 4 pullback. And it just so happens that lines up exactly where we're targeting, about the 200 moving average here. That's 546 right there. Not exact numbers, but so we'll be looking for this to get into there and off the 546, and that's going into that 9.5 zone here in the hourly time frame. That's our buy zone. Still in the time frame of what we were talking about, but price action isn't showing us this kind of a move to the downside, and so we're looking at the shallow move, which would be wave 4 and going into wave 5. All right, I hope that's clear. And now we're going to look at this in a couple different ways. Now, from this perspective of the Qs, we're not going to go through just through the 65. So on the 65 minute, we have this nice support here. We're getting into that support, so we had the reaction off of it, but clearly we can go a little bit lower. We have the gap area here. And this structure, we had a high here, so I think this was the A. We had the high of this next structure, and now we have to play out this lower high here, which then we have a straight line. So I'm thinking this is going to play out as wave 4. We're back testing this flag, that potential flag that we had that we broke down. Back test, and this should go lower. It could close the gap, but what we'll be looking for is a low at possibly 450 or even the 455 zone, and then going up into the FOMC with a lower high, closing a gap here, a deep retracement. So this overall is looking like about the 554 right there, and if it gets a little bit steeper and wants to extend, here's the 447 would be 762, but for wave B, this would be a good typical area. So it doesn't have to go much lower than that. It can. It certainly can. But that would be a huge extension from this move. That'd mean that price action is moving a lot more rapid, and we're getting a long wave 5. Okay, in a normal situation, this 1 is usually equal to wave 5. We'd get this 454. The extreme move would be the 447 because this structure is almost done. Okay, so our B wave, this would be an impulse move to the downside for a wave 1. I think I have that numbered. For a wave 1, we have an A, 3-wave move up for an A deeper retracement than SPY for a B, and then a C wave, which could be an ending diagonal or an impulse move up to the 887 retracement of this entire move to close the gap and to get our wave 2 in and a lower high and a much steeper retracement there. So this still stands where we're looking for a little bit deeper retracement to 50% at minimum. But SPY is much more shallow, relative strength, and getting a wave 4 rather than a B wave. On SMH, really looks the same, just a little bit more exaggerated. So again, I don't think we're getting down to these levels. I think we're looking at more of maybe the gap support here, and then into FOMC, just a higher retracement, which could be led by NVIDIA, AMD, etc., etc. So this structure right here looks like a 1-2, a wave 3, and we're getting wave 4, and we should see a wave 5 end somewhere down here, maybe at the gap or close the gap. This is what we were looking for before, but this nearly looks done. This move nearly looks done here. We had the end of this A wave, B, a very shallow B, and we're looking for a C. Now, this could be done already, but you know, I don't think that's the case. I think we have possibly, even though we're already getting into our longs. So that could possibly be the 220. We just eke out a new low here. Maybe that just ekes out a new low and shows relative strength where it's basically getting a double bottom, and then NVIDIA and all those other Broadcom show strength leading to the upside. Or if it really wants to mess with people, get down to these lows here at the 211. So those are the two targets I'm looking for this ABC. This will be an A, a B, and we're looking for the gap area at least the 786, and possibly even closing the gap at the 887. But I do think that SMH can be a little bit weaker than the Qs, so 786 would be appropriate for that move. From there or there. IWM, I think, is pretty much done with its move, its correction. We kind of pointed out a good solid area for it to pull back to, which on the daily, that's what we showed here. That's working out perfect. Now, it could go a little bit lower if the structure isn't complete yet. It's possible to spike through here. So far, maybe we just test the gap here, and then we head higher. And so I'd put this trend line underneath wherever that goes, and we should see new highs at that point. This is a corrective move. And then we'll be looking for possibly these retracements. Probably not going to hold. I think we'll get a new high here. But overall, I think this is what we're looking at again. Into these moves, I think we'll be looking for this to be an ABC move up for a wave 5. This is an ending diagonal right here, where 1, 2, and you get overlapping waves 3 into 4, and we're looking for an ABC into 5. Okay, into FOMC, this should be an impulse move to the upside. On the VIX, I think is going to hold up pretty well in all of this mess here, where we'll get some retracements. Let's look at the daily time frame. So it's possible this goes back, the back test again. Do I think it's going to make a new low? I'm not so sure. I think the VIX is going to hold up relatively in order to, we're going to get new highs, and 2 weeks from now, maybe it pulls back to test, but then I think it just is starting to make higher highs and higher lows at this point. And I think that's it, you guys. That's what I want to show you. Maybe we'll just peek at NVIDIA. NVIDIA is showing a little bit of strength. I think it's going to follow exactly what the... Now, this looks like a 3-wave move, so we could easily break out to new highs. But that's, you know, going to show some massive moves here coming up into... the 2 weeks into FOMC. So we'll watch this. It might be a straight up move here, but we're looking at the 618. So this is a 1-2 setup here, but we did test the 382 from higher structure. So if NVIDIA starts to break down just a little bit lower, even possibly all the way down to the 100, it doesn't have to get all the way there. It could peak below here and still consider holding the 62. But if it starts to fade lower, then it could drag the market to one more low that I was talking about. That's possible. And I think that's the structure right here. I think this is actually a 1-2, a smaller 3, and then wave 4 and 5 is 1, 2, 3, possible 4 and 5 with this momentum gaining here. So that's all I got to show you guys. Hope this helps. Have a wonderful day. We'll give you some more information tomorrow.